Gold futures are surging Friday despite a strong March jobs report. Hi, I'm Deaux, reporting from Wall Street. My guest today is ETF Securities U.S. Research Director Mike McGlone. Hey, Mike.
Hey, Joe.
Mike, when you look at these numbers, we see gold popping, nearing that $1,300 level. What's going on?
I think the number was basically as people expected. It wasn't really too strong, 2 weeks, so it's steady as she goes. That new normal situation is unemployment's kind of stuck here at 6.6 or so percent. Payrolls maybe 200, that's great, but nothing's really changing much. In gold, the market was a little bit oversold. It got a little bit too cheap, I think around 1280. It just popped right back around 1300. I think one thing that technicians are looking at is this cross. The 200 cross in the moving averages. The 200-day moving average is right around 1300. The 50-day moving average is turned back above it. And the last time these two moving averages switched was on the way down in February around 1600. So a lot of technicians are looking at that, and they're seeing stocks a little bit overdone, gold a little cheap, and I think you're seeing some asset relocation to some protection.
A lot of people today are going to be wondering, why is gold surging with the jobs report also looking very strong? Is that not the question we should be looking at, though?
I agree. We shouldn't be. And one thing you should watch, too, today was actually bond yields dropped a little bit. So the market, I think the boat just tipped a little bit too side, expecting an extremely strong number. It didn't happen. So the Fed's really out of the picture. They don't have to aggressively reduce tapering. They don't have to even think about tightening. I mean, that's really not on the radar, despite what they said. And the stock market's getting a little lofty. I mean, people know that. So what I've seen and we've heard is wealth managers, they have to be in the market, but they need some protection. What's a good way to protect is gold. And another thing that just happened recently is gold forward rates just switched back to negative, which means demand. Physical demand is starting to pick up. So gold, we mentioned earlier, is kind of stuck between 13 and 14 range. 13 is good support. Well, it's back there now. It's probably going to continue to rally. But one thing I've noticed is silver is looking really attractive. Because gold is essentially up maybe 8% in the year. Stocks are up 2%, so what's performing better? But silver is only up maybe 2 to 3% in the year, and the industrial metals have recovered. Remember, a little bit. Copper was really getting hammered. Silver is much more industrial. So if gold rallies and recovers, silver probably can rally and recover a little bit more, assuming the industrial metals don't go back down.
Sure, and I'm sure investors will keep a watch on it. Mike, thanks so much.
Thanks, Joe. Thanks for having me.
That's Mike McGlone of ETF Securities U.S. For TheStreet in New York, I'm Deaux.